All right, let's talk about Este Lauder. They just made a huge bet on their future, and wow, the market's first reaction? Not good. Today we're going to dig into their big Q4 earnings call to figure out what their plan is, how much it's going to cost, and what this all means for the future of this beauty giant.
So the story here really kicks off not with the financials, but with how the market reacted right away. And that sets up this really high-stakes situation. Are we looking at short-term pain for a much bigger long-term gain? That's the core question.
I mean, look at that number. The stock dropped over 7% intraday when the news hit. At one point, it was down a crazy 11%. So what on earth spooked investors so badly? What sent this iconic, titan of the beauty world into a nosedive?
And this quote from the CEO, Stphane de la Faverie, really gets to the heart of the whole thing. Management is basically saying, hey, trust us. This is the biggest transformation in our history, and it's for the best. But the market? It seems totally laser-focused on the immediate cost, on the pain right now.
Okay, to really get why the market reacted the way it did, we have to look at the numbers. We got to get the diagnosis right. And the Q4 results, well, they paint a pretty complicated, pretty challenging picture. You can see some really deep problems, but also maybe the first little hints that a cure is on the way.
So this is where things get a little tricky. You see two different earnings numbers here, right? There's this massive gap between the official GAAP number, a big loss, and the adjusted number, which shows a small profit. And what's filling that gap? It's over $500 million in restructuring charges. That's literally the company paying the huge upfront bill for this transformation, right here, right now.
You can see the pain is spread out, but man, look at that travel retail number, a 28% collapse. We're talking about those high-margin duty-free shops in airports. That was a massive drag on the whole company's performance, and you can bet that's a huge focus for management's big fix.
But, and this is a really important but, here's the other side of the story. Even with sales falling off a cliff, their gross margin actually got better, a lot better. This is the first real concrete sign that their cost-cutting measures are actually starting to work. They're becoming more efficient even while the business is getting smaller. So the diagnosis is pretty clear, right? Sales are down, but the underlying business is getting more efficient. So what's the prescription? Well, it's this massive company-wide overhaul that they're calling Beauty Reimagined.
This whole Beauty Reimagined plan is built on 4 main pillars. If you boil it all down, it's pretty straightforward. Reach customers where they are, online, create new, better products that people actually want, spend more on marketing to get the word out, and then, cut costs like crazy everywhere else to pay for it all.
And this is the big prize at the end of the tunnel. If they pull this off, the company thinks this whole painful process is going to generate between $800 million and $1 billion in savings every single year. And the plan is to plow that money right back into growing the business.
But here's the flip side. To get those savings, there's a real human cost. We're talking about cutting up to 7,000 jobs. That's potentially 12% of their entire workforce. It's a pretty stark reminder that these big corporate buzzwords have real-world consequences for people.
Okay, so what about the next year? This is really where the rubber meets the road. The company's forecast for what's coming, this is where their optimism kind of slammed into reality. And honestly, it's the biggest reason the stock took such a hit. Yeah, the guidance was the big problem. Management's forecast for their adjusted earnings per share, it just came in way below what Wall Street was expecting. And that sent a very clear signal to investors. This turnaround is going to take longer, and it's probably going to be a lot harder than we all hoped. And this isn't just them being pessimistic for no reason. This cautious guidance is because of some very real challenges. You've got that ongoing weakness in travel retail, the luxury market in China is looking soft, and then there's a $100 million hit coming from new tariffs. I mean, those are some serious headwinds they're sailing into. But it's not all bad news. Amidst all those headwinds, there are some really promising signs. Some green shoots, you could say. Their online sales have just surged to an all-time high. It's now 31% of their entire business. This is the proof. It shows that their big push into digital, a key part of Beauty Reimagined, isn't just a slide in a presentation. It's actually working. It's gaining real traction. So, let's put it all together. You've got some painful numbers, a really ambitious plan to fix things, and a pretty cautious outlook for the near future. So the big question is, what do you do with all this information? What's the actionable takeaway here?
I mean, this is the question on every investor's mind after a roller coaster report like this one, right? Do you buy into the long-term story and bet on the transformation, or do you see the short-term pain and just run for the hills? Or maybe there's a smarter, more nuanced way to think about it.
Here's an interesting idea. A more advanced strategy called a pair trade. The thesis is actually pretty simple. You bet on Este Lauder's digital future by going long their stock, but at the same time, you bet against the old way of doing things by shorting a bunch of the traditional department stores that they're leaving behind. It's a cool way to play both sides of this huge shift happening in retail.
So, where do we land on this? Our final call is a market perform rating. Look, the long-term potential here is huge. It's compelling. But the short-term pain and the very real risk that they might not pull this off, it all creates a pretty balanced risk-reward picture for right now. Which leaves us with the big billion-dollar question, doesn't it? Can a legacy giant like this really reinvent itself for the digital age? Or is this massive, historic transformation just too little, too late?
And of course, just a reminder, this is not financial advice. This analysis is just to get you thinking. Always make sure to do your own homework before making any investment decisions.